The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
All right, folks, as we start wrapping up 2022, we're looking at the Dow on this Thursday, the 28th, at up 41 at 33,280. It's been a real struggle over the last week and a half, ever since that sharp down day. That was about the 14th or so. Let me just check what day that was. Right there. It could have been the 15th. Yeah, the 15th. That sharp candle is suggesting that for us to see a very strong near-term rally, the Dow has to close above that level, and that level is 32,773. I mean, that's 500 points away from where we are, and the market's struggling. So that could take a little while to do. More importantly, so far, in the daily chart, you can see over here, 200-period exponential moving average has been a very strong springboard, cushion or springboard. Well, I think from 32,600s to the 33,300s, yeah, you could call it a springboard. But it really means nothing until you start to see the Dow, at least very, very near term, trading above the 33,437 high of the 21st five sessions ago. Now, in the meantime, stuck in the range. More importantly, what we're looking at is the S&P. See, we can talk about the Dow above the 200-period moving average. Look at this. The S&P 200-period moving average is a 4,005. It hit 4,100.96. You remember that incredible double top, 4,100.51 December the 1st, December the 13th. It pulls back. And December the 13th, it pops to 4,100.96. I mean, 45 cents away, 47 cents away from making a new high. Even more important than that, look at the Dow, the S&P's up 7.35 at 38.36, but look at the QQQ. This is the 200-period moving average. It didn't even get there on the last rally. That's up at 299. Let's call it 300. Here we are at 264. There is so much work to be done to be able to move into the sphere of the 285, 292 level. It's just going to take a lot. And if you're looking at I'll tell you what is important. In the arch formation, when after a very quick peak A, peak B, peak C, peak D, that's four higher peaks from the low bar of 254.36, that says that the rally going all the way to four higher peaks was less than just a leg B that failed, going from 269 to the 320s, 334.42. So that just speaks of weakness, and therefore any pop would just be a pop. It needs much more. It needs, by the third week of January, if it's even able to rally to the 272 level, we're at 264, and then touch 275, that would suggest that finally you've got a little bit of a turn in the technicals that suggests that maybe this can rally a little longer. And that would say that if 255 on the downside is not pierced in the next 2 weeks, but instead we rally up towards the 276, 277 level, that says, wow, you actually had an arch formation that held beautifully above the 254 level. We went to the 263, and that was yesterday. Yeah. Oh, that was today. 262.22 is today's low. And if it rallies off that, that's a successful test, because the MACD so far is much higher than it was before. Stochastic's higher than it was before. That on-balance volume is very weak. And the 9 in the weekly is still, it deflected lower and is still very weak. So that's the QQQ. Let's look at the IWM. Tomorrow when I do my show, I'm going to be doing my show 8 o'clock to 9 o'clock Eastern time. I have to be out. And I will not be doing my show on Friday. I will try to send out a newsletter if I need to on Friday. It'll be very brief. But most important is that within the context of looking at the first few weeks of December, I will give parameters that at least I'm looking for in the various key stocks and key indices. We'll just go through it in a very thorough way, and it'll be purely notational. In other words, on the charts, we'll talk about what levels need, what it would take. For instance, here I'm looking at the IWM. What would it take for the IWM daily chart to see the pink 9-period exponential moving average, which is at 174.70, cross above the 175.96 black 14-period exponential moving average? It would take a lot. And that's how we're treating it. Now, within the context of the gold, looking at gold, here we are. Yes, I do want to do a couple of things. I saw, was it yesterday? I made a note. Yeah, I will look at that Exxon chart. And there are some things that people have asked me if I would look at. I'll do that between today and tomorrow. Gold, only down 11, up at 1812.3. And look, the 200-period moving average has been key support. It keeps rallying and then coming back, rallying and then come back, until gold is trading in the 1863, 1868 level and leaves this 200-period moving average alone, just leaves and says goodbye. It's like a magnet, but the 9 is over the 14-period high. We've got a caller. We're going to go to Costas in Arlington. Costas, how are you?
Good, thank you. How are you? Merry Christmas.
Yeah, and the very same thing too, and a very happy and healthy and successful new year. You'd like to look at?
Amazon. I'd like to know what the entry point is. What's a good time to get in?
Yeah, so Amazon, it's a very interesting chart pattern because it made a full retracement in this pattern. I don't know if you listen to me when I talk about the arch formation where we can get price symmetry. Well, from the 81.30 low that was made back in March of 2020, Amazon ran up to 188.65. It did a split, so I'm talking about the post split in July of 2021. And if I take the candle, that inverted Chapman wave Roman candle of July of 2021 as the midpoint, this month, December, our low, actually the low today is 82.004. So we were within $1. It's just unfathomable that you can talk about these things. And if I'm here, let's just move this chart. I don't know if you can see my charts on Tiger TV, but if I was here and I'm looking at 81.30, the MACD is starting to turn down, the stochastic's flat but still above 80%, the on-balance volume is good, the 9 is fabulous, and here you are making a new all-time high in July. And if I was to say, you know what, March 2020 to July of 2021, in December of 2022, we will be back at the 81.30 level. I don't think, certainly I wouldn't have believed that it could happen until we started to see the selling. And then I said, I'm being very careful now because I think Amazon is going to make lower lows and lower highs. It's just amazing. So with that said, let me tell you what I'd be looking at to start, at least start an entry point in Amazon, because I've had a question from a number of people, especially over the last few months, about Amazon. Can you hold on?
Yes, sir.
Great. Costas, I'll be right back. Costas is in Arlington, just near me here in Newton, Massachusetts. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back and we're on with Costas in Arlington, Massachusetts. Costas, Amazon's trading at 83.36. If I look at my Chapman Wave automated support and resistance levels, the daily chart has 82 to 81 and then 79 a couple of times. It has 4 different automated support levels, and that's in the daily. The weekly chart is 77, and the 120 minutes has 81.36. So you can see there are a bunch of support levels, but this is my biggest concern, and that's the reason why I've been following Amazon quite closely, because if you look at the RTH, that's the retail, that's the Van Eck retail ETF, 20% is Amazon. That hasn't taken out the left side, any of the left side lows, and there's a trend line that's really important here. Oh, I drew that trend line in something else. What did I draw it in today? And it was something I must remember because it had this Chapman Wave inverted. Okay, there we are. So, yeah, I'm going to make this blue just to show you how important it is. So the weekly chart and the RTH index went down to this trend line that it's held a couple of times, and that's the weekly chart. It went down to 156.39, and Amazon is 20%. So with even though Amazon has made this full U-turn in this arch formation, this index has actually held pretty well. If I look at the, that was the, I had it just a moment, XRT. XRT is the one that doesn't, it's equal weighted. S&P retail ETF is equal weighted. So Amazon doesn't distort. It has a slightly different pattern, but this one has in the daily chart at least come back in almost a full circle, but the weekly chart is holding well. So something tells me that Amazon in its own way has had a huge, I can't call it a digestion because this is indigestion, just a massive move down that has lost a great deal of momentum. And the only thing I can think of is that Walmart and so many other companies are doing something not exactly the same, but something similar. So my question to you is, if you're doing just a near-term trade, that's one thing. At 83.36, I think for a 2-point stop, you could get yourself about a 6-point rally. But I don't think that's your question. From the tone of your voice, my thinking is that you're looking, is this the time to buy Amazon for a decent move in 2023? Is that your question?
Yes, that is my question.
Okay. So if that's your question, I find it far superior to, rather than pick the low and say, great, I've got the low, rather, because in trying to get the low, you might have to go in 2 or 3 times. And yeah, if you have a tight stop, it's not a big deal at $183 stock to have a couple of 2-point losses, because if this does work, it should have a really quick move to get the pink moving average, that's the 9, which is negative under the 14, to cross positive. And that will say it wouldn't take all that much. Going to the 89 level at 6 points from here, you would expect, but we have to put it this way. The season for Amazon, the actual season, is kind of gone, going into the holiday season. Now I think that consumers probably, this is the time that consumers start to pull back a little bit. So I'm going to say, keep your eye. Do you ever do options?
No, I don't.
You don't? Okay, because my suggestion would be...
Stocks.
I'm sorry, what?
Strictly stocks, buy stocks.
Okay, there's absolutely no problem with that. I always find that can, for most people, that's just the best way to do it. And for some people, actually, to get out of the market when they're nervous and then to start getting back in and always on the buy side, that works as well. All right, so in the meantime, I'm going to say to you, I would prefer to give this about a week or two, and let's see if Amazon in January, I would say by the week of the 13th, going into the 20th, that 7-day period, if Amazon can, instead of sliding under 79, and it's at 83 right now, if Amazon can start to move steadily on a weekly basis to tackle the candle of 3 weeks ago that had a high of 96, I'm not saying it needs to go to 96, I'm saying that's the candle itself with a long wick. If it at any point can hold for 2 days in the 90, it needs to be more than 90. But even if it got to 90.50, I would want you to call me again, because that's where I will say to you, okay, how is holding support in a market that's kind of shaky going to the first couple of weeks of the new year is going to be really important. I think it's best in many ways. Looking at the chart, you have to say, are you kidding? Is Amazon's best days gone? I don't think so, because they've spent so much money on their infrastructure that I think that it's a really, I believe visually it doesn't look great, but I think as I read more and more, I think internally they've done so much that I would not dismiss it at all. I'm with you. I'm looking at stocks like an Amazon that says, you know what, I've had a massive decline. I'm at least going to try to rally 30% to 50% at some point in the first 3 months of 2023. That's kind of the way I'm looking at it. So I'm going to say to you, hold off for now. Normally I'd just say, take a little nibble here at 83.29. But the way it just keeps making lower lows and lower highs, I would prefer, in your case, since you're looking at it, would you be prepared to add to it if it was working for you?
Yes, I'm prepared to buy more. I only want to buy like 25 shares at a time, up to 50 shares. And if it goes to 79, like you say, I can pick up the other 25 shares.
Okay, I like that attitude. So then, if that's the case, with 3 to 5 shares, I'm going to say let's give it until early next week. If you can call me early next week, I mean, if it moves up 2 points, that's not going to make that much difference. What you really want to do is to accumulate the shares so that you've got your core position in weeks, a couple of weeks, or maybe even takes a month and a half, 2 months. It doesn't matter. But let's get we haven't got a trend change right now. Everything says lower lows and lower highs. And until that happens, let's see if we can get some upward momentum. What I am going to say to you, in the meantime, if I don't speak to you, if between now and Tuesday or Wednesday of next week, you see it trading at 84.33, I would actually start my very first little position just to get my foot in the door. Why? Because the way it's acting over the last 5 or 6 sessions, it's slowed its momentum to the downside. And that's really what I want to see. Don't be anxious. You don't even have to do it today, but I'm just saying I would just maybe get my foot in the door only if it rallies about 1.5 points from where it is right now. Hope that helps you.
Okay, thank you very much.
And we'll be following it very closely. Thank you for calling.
Great.
I appreciate it, and Happy New Year. Thank you.
Bye-bye.
So, folks, the market was rallying. I wouldn't say rallying, but it was attempting a rally. The Dow was up. Now it's down 51 points. The S&P's down 4. And I'm just suggesting to you that I know that there's a lot of looking at the last couple of days, starting from, it usually goes into Christmas, but very often, you remember we had the 26th of December Boxing Day, English Boxing Day in South Africa. We used to have Boxing Day. I never ever figured out what it was. Boxing Day, the 26th of December. That's normally when there's a rally that goes into the first week of January. We saw that last year. We saw that year when we made the low on 26th of December, 2018, whatever it is. This is different. There's a lot of selling pressure, and I'll talk about it when we return.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Remember with Nike, we were looking at it, and I said we're in the rectangle formation, and this is something that you've got to be monitoring because it's holding well. But the question that I had was, is this where you put new money to work because it's so fantastic, it gapped up and it's holding there? No. Because my theory about the gaps is that if it holds, even if it takes out the following session, takes out the low, preferably it doesn't, but if it does take out the low of the gap spike high, then you want to see at least 2 or 3 bars inside, and preferably on the 3rd bar today. This is the 4th. On the 3rd bar, there's an attempt to get to the high, in this case 119.18. Well, so for the high today is 118.24. It's not doing that, but it's still holding in the rectangle. But my theory about this particular gap is that even if it goes slightly above there's a chance that if it starts to pull back and then takes out halfway into the rectangle, it's not only going to test the low, but it probably will do some filling of that gap. So this would not be the time to get in. Rather keep it on your list and say, wow, it responded so well to a better earnings report and outlook that this is on my radar as a potential buy, but it needs to pull back. The weekly chart is still very strong. Leg C, maybe this week it makes a peak C because it doesn't make a new high, and a leg A in the thing. Now, I just wanted to do this. I said I would do this for people who attended my all-day webinar. So the question was, can you show us some things where you would get in and what you were using, what techniques? Well, in this particular instance, the E-mini made a peak F right there. I did this, I wasn't up, but I did this as notation because I always notate going back as far as I can because I want to see what's happening in this particular instrument that we're following. This case is the 1 minute, this is the 10-minute E-mini, the March E-mini. And here we go to peak F of 3869.50. Then it pulls back. I spent a long time over the last couple of weeks talking about these long rectangle formations, and that if eventually it does pop above the rectangle high, it can go to D, E, or F. But when it comes back, if it takes out halfway into the rectangle, be careful because it can go all the way down. It often takes out the low. This one didn't take out the low. It started a new buy mode. And then it was rallying. I was up at about 6 and I was watching this and I thought, oh, did I just miss something? I didn't like the fact that it was in this rectangle formation and that all I'd be looking at was a rally going to the 330 high, 330 meaning 3:30 a.m. at 3869.50 Eastern time. But I did get in right there when it crossed positive and held that line, had a nice little rally, and it got to the requisite leg D going to a peak D, and that was just underneath the previous high of that peak F top. Out, watched it, was upset that I didn't switch to negative to the short, but I was busy with my newsletter and all that. And then what happened is you get the 9 o'clock open, and the 9 o'clock open had this huge candle. You see the wicks on either side, looks like a firecracker, right? Here's your little thing that you turn around. There's the body of the cracker, and there's your, funny, I talk about firecrackers. I never ever use firecrackers, but I followed them over the years because we used to have Halloween back in South Africa. It was always very scary. And what happened is, remember, the low cannot be the high except at a peak D. So this low that was made at 940 in the 10-minute chart of 3846.75 sprang up. Or did it go up and then down? Whatever it is. I think it went up, then down, and then up again. And yeah, it closed towards the high. And look what happened. That is not an A because this is still going down. That's still a leg B. On this side of that candle, if it made a new high, I can call that leg A. So there's no A here. Even if I put an A minus, that would be incorrect. There is no I. Even here, there's no A because all of these are lower highs and there's a double top. So this is not, I would put an A in like that, but I have to cross it out because that's incorrect. You can't get an A until you make a right side high or low. That starts your trough. After the trough, you start the count. So I hope that's clear. Now, the one thing I'm upset about is that on the 1 minute chart, remember, I've been talking about these long, extended, narrow rectangles can last a lot longer than your patience. And the only way you trade these is that if you can get the bottom, you ride it to the top, and either you get out or you're short at the top. Wait for it to get to the bottom. At some point, it's going to do something different, like it did there and there. But look what happened. The weight of evidence said that there was still weakness. And with that said, let me show you something else that also is fascinating to me. If you're looking at, that's the 5 minute chart. So that's 1, 5, 10. That's like daily, weekly, monthly charts. There's no difference. I mean, these patterns are fractals of human nature, so they recur over and over and over. There's a rectangle, and it lasted for a while, and that is a peak A with a doji candle, and then underneath it, you got to count the peaks. Peak A, peak B. It should be gray. I didn't want to change the color right now. I haven't time. And then peak A, peak B, and then it takes out the low. and then it rises peak A and a B, yet another peak A and B, and that one fails. And then it goes again, peak A and peak B. Look at that, flat top. So it's fascinating to me that when a pattern starts to unfold, it continues unfolding for a while. Look, peak A, peak B minus, because it failed, made a lower low. Although that's your starting point right there. So when I say failed, I just mean it broke down. It didn't continue to a C or a D, but it was still above that low. This is a peak A and a B. And yeah, you've got yet another, just a peak A, right? Here's an A and a B, and then it failed because it came down. Look, that's a parallel high. So I'm just putting a minus in there. Now I can't put the minus in. Why? Because it took out the starting point low. So what happens is now this is a fresh A, and then I always have to do the notation. I go back there on the way down. A, that's not B, but that's an A. Right there, A, then a B, then a C. So this sounds so cumbersome and everything, but as you're doing it, for people to actually do it, it takes no time at all. Just as you're looking at it, you might as well just put in the letter, right? E, F. And remember, I always say, when you get to a G, consider that it's a G alternate count, which means that that would be an A, F/B, G/C. And I always put the G/C saying, okay, sometimes you get a G that's an absolutely beautiful left side, right side price time. That's called bar symmetry low, or whatever it is. It's a low that counts. Be prepared that it might still make a slightly lower low. But at the same time, I never had a chance to do this. So the rule of thumb with me is, in looking at left side, right side price time match, if it really looks like it's going to fail, then I'll go to at least a trough of importance, a candle of importance, and then that's the low right there. And then I would just go click. So that's green. This one becomes pink. Let me change that to green. I don't know where that's going, right? And I make this green right here. And then I go from a particular candle on the left side. I don't even have that right now. So I have to choose this one right here. And I say, okay, I'm just going to draw in. I'm just going to go from the trough to that particular low right there. I don't want to move it over to see where it is. That's what I'd be doing for the inside wedge. Target support level, and usually I make that pink, right here, pink. There we go. And then I say, okay, take it to where you want. And what happened was way longer than that. If it got to that level, at that particular point, I'll say, okay, if it's going to keep going down, I have to extend it. Then I'll use that high right there as a left side, right side time price pattern. So here we are. Now we're going to possibly go to this later.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back. So there are a couple of things I want to talk about. On the one hand, GT has just sent me a text saying puts on KWEB, and I have just coincidentally right now I have and then Code has asked about Queb. So KWEB is the I believe that is the, let me just double check. I should have this. I used to have it written down, but I don't. So that's a peak A, peak B, peak C, D. So it made an inverted doji, it's like a little hammer candle right at the top, goes to over 100, drops to the 19s. Now it's trading at 30, right on the 200-period moving average. So Queb is the China Internet ETF. So at this particular point, it's had a spectacular move. Now you can see that in this peak D here, all the technicals that are important in terms of momentum, like the 9 over the 14, like the MACD deflecting higher, not the stochastic pulling back under 80%, but the on-balance volume ran nicely. At this peak D, this is the 15th of November at 27.19, it makes a little double top at peak D and pulls back. It pulls back enough that I could have said, yeah, that could have been a top. But because the 9 was so strong, I didn't do anything other. I normally over a D and an E, I put a plus sign, so that stayed a plus sign. But I also considered that there could be an alternate count. Why? Because the low that was made right here under the 14 said, oh, that's a little too deep. And it went down to 23.99 on 25th of November. So in my mind, I was saying there could be an alternate count, but as long as the 9 is above the 14, let's have an alternate count that says E. In my mind, I say A. And now I don't, for subscribers and for people that have done my workshop, I've mentioned often enough over the last year that I think enough people get it that if there's an alternate count, when I get to G, I put G/C. And the reason is, very often it pulls back, makes a little cup formation or a V-shaped formation, and then makes the missing D. And that's what you've got to be careful of. Let's just have a look at the 1 minute chart that I was looking at a moment ago in the E-mini? No, it was the 10. No, it was the 1 minute. So here's the 1 minute chart, made a G/C. It's making an arch that can go to a lowercase h, goes to a lowercase m, and if it takes out their left side low, that's going to be the D. So we're watching this very closely, both now on the Dow side in the live 1 minute chart, and we're looking at it live in Queb, the daily chart, saying, okay, so it got to that high. I can only put a plus sign here because it's still going basically sideways. Sideways in this particular market at a recovery high is a very good sign. I had that exact same thing with GE. I wanted to give it as a potential buy in the next week or so, but then I remember, wait a minute, they got a 3-for-1 split coming up. And this is, I think General Electric has turned the corner. I don't like the fact that it's had that inverted split. That always worries the heck out of me. But the chart has so far done very well. But there it is, holding, it's a different pattern. I'm just talking about a pattern that goes up and then stalls. And in this particular case, look how nicely it's done over the last week or so. It's a nice rally, but I think you have to wait to see what happens when the breakup comes. So let's go back to QEB. QEB. And all I'm saying is this rectangle formation stalling at the 200 period moving average after a really fantastic move below 18, almost, going to 32, not a double, but that's a fabulous move. That's, 47% or something like that move to the upside. Oh, no, it's more than that. So I'm looking at this and saying, I like it. Keep it in mind. What would you do right now? I'd say I'd have to hold off. That 200 period moving average at 30.35, I would consider that it's a little bit lower than that. It's at 29.90, and it's trading right now at 30. So I would just call that a magnet for now. If anything, it's making slightly lower lows and lower highs. It could have a little dip to the 28 level, but at this particular point, if you're in it, I think it's done well. I would hold it. I'd probably say, you know what, you could take a little bit off just as money management if you've had the big move. But all that I would do is say you want to be putting that back, because so far it's a Chinese stock. So you've got to be a little careful there, but it is definitely one of the better movers, and it's done well. So I wanted to point out that G/C did go to the D, and now it's stalling. With that in mind, we've got another caller. Let's go to our caller. We've got Brenton Martinez. Brent, how are you?
I'm doing well, Basil. Good morning.
Good morning. And let me just say to you, I wish you a really happy new year and a successful new year. Healthy and successful.
Yeah, same to you, Basil. I hope it's a great one for you.
Thank you very much. You want to look at UNG?
Yeah, I know there's not a ton of time. I'm looking at two different patterns that have confirmed that have 1-to-1 down to like about 12 on one of them and then 10 on the other. Just wonder if you have anything in your work that would coincide with that, or anything that you happen to see with that.
Well, there are a couple of things. Number one is I just wanted to mention to you that I saw on Bloomberg this morning. I think I read it correctly. It was real quick. That there is a vessel out there, a container, a tanker, that has been waiting 80 days for a bid. They haven't had anyone want to take their natural gas. So that, and it's mentioned in the den. Thomas mentioned in the den. I think Z has mentioned it, that the Henry Hub. There's a blog, really a blockade at this particular point. I have UNG in my automated Chapman wave support and resistance levels. 1230 to 1241 is the first daily ones that are coming in. I even have a 10.45 on the 1378 and 10.45 in the weekly charts, but I'd go to the 3 times hit 10.30, 10.40, and 12.30, 12.40, is that 8? Yeah, 12.49 and 12.36. But more importantly, if I'm looking at patterns, you're looking at an extension. You're looking at a potential 1-to-1 pattern, right? And you're talking about the 2461 high of the 23rd of November down to 16.30 the 7th of December. So that would be A to B, and then you would go C to D was where I've got gray A with the doji candle on the, right there, on the 13th of December. Is that kind of what you're looking at for the downside?
Yeah, there's a smaller one within that bigger one, but yeah, that's correct.
Yeah, so I can't disagree at all with you in terms of what it would take to at least get a signal that some kind of technical, what can we call it, some confirmation of an extension is unfolding. I would prefer to see something a little, I know that you like to pick, if you can, and you've done it so successfully so many times, you try to pick the exact bottom. I'm just saying to you in this particular instance, there are a lot of fundamentals that are going on as well, and that just says to me that I would have in mind a price, and then you need to see how it behaves at that particular price. So what do I have right now? I have maybe 1346 to 1280. Those are the levels that I'd be looking at. If you want to hold on, there's a little bit of something else that I wanted to talk about. Can you do that?
Yes, absolutely.
Okay, we'll be back with Brent and Martinez. We're looking at the Dow down 60.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with a 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, we're back. We're on with Brent. So Brent, what I wanted to say to you, and this is just, I'm not sure if you use these particular techniques. If you do look at the 9-period, under the 14-period moving average, you'll see that it's expanding. You see that the MACD in the daily chart of the UNG is expanding the histogram. That means the distance between the red and the green line is expanding. And if you look at the stochastic at 7%, it's flat. It's the same as when I say you want to see a stochastic above 86, preferably above 90%, and flat for a buy to hold. And on the downside, you want to see it underneath 10% and holding flat for it to continue lower. So when that starts to change, when you start to see the stochastic actually moving to the 13% area, you'll see at least a decent bounce percentage-wise. And the weekly chart, it looks like it's definitely turned down to the point where even if it establishes a low, unless it's just spectacular news and it makes a V-shaped turnaround, the whole area of the left side low that goes to 1169 back on the 27th of December, a year ago, exactly almost to the day, a year ago, we've had, 2021. So it's in the weekly chart, you can see that there's this prime time. Let me just see if I can make this a match. Right, it goes to that high. and then that low. Yeah, and that says within another week or two, there should be in that area that you're talking about. That'll be the really big test because I've got a left side, right side price. Oh, it goes to next week. It goes to next week in the 12s, 1169, 12 to 1169. I don't know if it'll get there, but that's going to be the evidence. Weight of evidence says you've given back everything from a year ago. How do you hold the left side low? I hope that helps you.
It does very much, Basil. I really enjoy that price time match, plumb line that you're using. That's awesome.
Good. Thank you very much. Folks, stay tuned. We've got Steve Rhodes, great programming here. I'll be back tomorrow morning, 8 o'clock till 9. It'll be recorded, so maybe it can be replayed Friday. I won't be here Friday. I'll be back tomorrow. Have a great